It's interesting. A lot of people ask me about value versus growth, right? I kind of remind people that we should maybe think about the definitions a little bit, right? So a lot of these definitions were created in the 70s and the 80s, where someone decided that these industries were going to be value, these industries were going to be growth. But the reality is, what's happening today is technology, whether it's technology in software, whether it's technology in healthcare, whether it's technology in consumer discretionary, it's cascading and pervading all our lives. And so what's really happening is a little bit like what happened with Kodak and the film camera and how it got disrupted by the digital camera. It's just happening on a much larger scale. So when I look at the S&P 500, more than a third of the S&P 500, in my view, is actually at risk of secular decline and is getting disrupted by a lot of other industries. And so it's almost like when you look at growth versus value, you're looking at the disruptors and the disrupted, right? But I would argue the disruptors are going to keep disrupting these disrupted stocks for quite some time. If we go back to the Amazon example, Amazon is still less than 5% of all US retail. So when you think about the runway for growth in Amazon and the ability of Amazon to actually continue to take share from bricks and mortar retailers, there's still a very, very long runway for growth and for that trend to keep continuing. There's a number of them. So I think about the ones where it's already happening and I wouldn't necessarily invest in them. So shopping malls, bricks and mortar retailers, I think that's already happening as we speak. So it shouldn't come as a big surprise. I think on-premise based software vendors, so relying on sort of traditional software that's got to be installed on a PC, I think they're sort of getting disrupted by cloud-based and SaaS-based software vendors. I think that's another area, and that's also happening today. If I look ahead, the areas that I do think things are going to be quite different for the traditional disrupted companies, I'd say banking could be quite interesting. So when I think about the barriers to entry in online banking that keep going lower and lower, and a lot of online disruptive startups coming up with FX-free, fee-free services, I do worry about the profitability of the traditional large incumbent banks. The second area that I worry about is auto OEMs. I do think stocks like Tesla, companies like Rivian in the US that are going to produce electric trucks, can meaningfully disrupt the sort of traditional BMWs and Audis of the world. I do think that part of the market needs to watch out for all the disruptors that are coming there. Those would be sort of two I'd call out, but there's plenty more. Few different things, right? So the hallmarks, need to be, so if you're a company that's getting disrupted, I think the hallmarks need to be, you need to be bold enough to make some really tough decisions about asking yourself existential questions around your business, right? So a good example of this is actually Volkswagen. So Tesla has done an incredible job disrupting the traditional auto OEMs and introducing a product that is more attractive, that's more fun to drive, at a cost that is now getting economical enough for most people to actually mass adopt electric cars. A lot of the traditional auto OEMs have taken a very traditional approach to this and reacted very slowly to the trend of electric cars, but Volkswagen is the exception, where they're much more willing to ask themselves the really tough questions around their existential threats, and they're actually investing an inordinate amount of money into electric cars. And I think that's the reason why they are going to produce probably the most credible competitor to Tesla's electric cars over the next 5 years. I still think Tesla's cars are going to be far superior, but Volkswagen's at least going to get there to some point.